Moving on, profitability is the hot topic for startup founders and investors this year. EdTech unicorn Eruditus losses had ballooned to $264 million in FY21. The company, however, claims to have grown 2x year-on-year in 2022. Speaking to my colleague Aishwarya Anand, Ashwin Damera, the co-founder and CEO of Eruditus, said that for FY23, the company is almost break-even and will hit profitability by June. Listen in.
So if I look at the FY21 numbers, of that 200 plus million that you're referring to as a loss, nearly 200 million was just expensing of stock options. Okay. So our valuation went from $700 odd million to $3.2 billion. Okay. Right, it went up 4x. So on that delta, our stock option pool, we had to do a mark to market. So that's a accounting entry. It's not actually a cash loss. But having said that, look, you're right. Every company in this environment is looking for profitability. So fundamentally, the paradigm of how even outside, say, investors or stakeholders have looked at us has changed. But I think it's a very good thing. So good companies that have a solid business, you will quickly figure out who they are. And there'll be some companies, who are Hawaii mein selling this idea that I'll build a community and sometime in the future I will monetize them, and they'll realize that it's not. They will probably disappear.
But on that note, please do shed some light on what your FY22 numbers look like, and what's the target for this year? For FY23 to 24 also. We
grew about 2x year on year. I'll tell you this year because this is most current. This year we'll end with bookings of about $430 million to $450 million. This quarter we're nearly break even Jan, Feb, March, and next quarter, April, May, June, we will be profitable. You
have also trimmed your workforce by close to, I think you've laid off 40 staff. So I want to understand for you that why did that happen? Why did the company decide to take that decision? And what are the hiring plans for this year? Is the pain behind us, or is it going to be tougher this year?
So, these are, like you rightly said, we also had to look at our people and every single cost, by the way. But what we've definitely done is there were certain areas where we were spending where the ROI was perhaps negative. Okay. Right? Maybe we should have got 100 students in a class where we enrolled 120. Those extra 20 maybe were coming at a very high CAC. Right? Maybe we were creating 100 courses a year, but maybe only 80 were needed because the other 20 were not actually very good courses or did not have market receptivity. So every company is looking at every single piece of cost, every single piece of revenue, every new product initiated, every new market that you may be in or you may want to enter into, and looking at what's the right area for us to trip. I think about us as looking at good growth and bad growth. Good growth, even if it's loss-making for us, I think we will continue to have the appetite to invest in. So bad growth, no chance.
A large share of your revenues come from outside India. That is, I think your top 3 markets have been US, Latin America, and Europe, correct? So I want to understand that, will you continue focusing on the international markets for majority of the revenues to come in from? Or, you would start building, you would start focusing on India to become your top market too?
Great question. Actually, India now is our second biggest market. So US is 35%. India is now about 25%. Okay. Our gross enrollment ratio in India is 27%, meaning only 27% of the kids who finish high school go to college. US is 80%, UK I think is 55%, China is 40%. So, if you want to take that 27% to 40%, right, that means about 13 to 15 million seats are required in our higher education institutions. And the only way to do it will be online. I mean, some of it can be through new campuses and all of that. That's a massive opportunity for everybody. If this bill for foreign education providers to come to India is passed, massive opportunity for the entire ecosystem, right? We're also thinking about how do we go to Bharat, right? Even today, our courses, if I am honest with myself, it's tier 1, it's, for English speaking.
The urban cities.
Urban cities, right? And, the need that 600 million youth, not all of them speak English. Correct. So we're trying to find those universities that may be a big brand in that tier 2, tier 3 city. Maybe even teach in English, right? Maybe their MBA program is priced at, 40,000 rupees for 2 years, right? And maybe half of it is charged now and half of it is charged after you get a job. Yeah. So we're looking at a lot of these new models. Of course, we have to also think about if you're charging 40,000 rupees, can you still deliver quality?
Do you plan on raising more capital this year or maybe next year? And or will you be treading the fundraising path very carefully?
If there's an acquisition that involves cash, then obviously we will want to. But even otherwise, look, if the markets start looking slightly better for us, potentially, our focus, if you ask me today, is just think about being profitable. I often joke that for 7 years of Eruditus and Emeritus, we were profitable. We didn't raise any external capital. So we know how to run a profitable company.
Business, yeah.
We all got a little distracted, but now we're focused again.
With that, it is time for a short break. Coming up next, a special conversation with Arvind Mani, the co-founder of River, an electric two-wheeler company, on the latest launch, Indy. Stay tuned.
The government's persistent push towards EV adoption has led to a gold rush, with multiple players trying to capture this opportunity, mushrooming of startups in this EV space. And the latest entrant here is Bengaluru-based River, which has just launched its electric scooter. And to talk to me about that and the plans for this River EV, the newest kid on the block, is its co-founder and CEO, Arvind Mani. Arvind, thanks very much for speaking to CNBC-TV18. 2 years in the making almost for this electric scooter that you've launched today. You call it the SUV of scooters or electric scooters. What is the reason behind that?
So we have several features that kind of make the scooter stand out. It makes it very distinct in terms of the utility and the lifestyle that it brings. Like 14-inch wheels, we have the largest storage in any scooter out there, not only EVs, in any scooter out there.
Okay.
We have several customization options for which you can use the scooter in a different way at different times of the day, depending on your need. So all that makes it the SUV scooters.
So who is this targeted towards? Is it for people commuting every day to office? Is it for the Swiggies and Olas in the electrification of their fleet? Or what do you think is the target market?
So we are targeting solo entrepreneurs, and as you know, more than 50% of India is self-employed, whether he runs a store or a carpenter or an electrician or any of the people who pick up a trade like a home chef. So this is targeted at them who has a need to do multiple things other than commute on a vehicle.
I see. Yeah, the big question always is, how much does it go on a single charge? And secondly, how is it priced and how does it compare to the peers?
Sure. On a single charge, the vehicle goes 120 kilometers.
Okay.
And it's priced at 1,25,000 rupees ex-showroom Bangalore.
Okay.
Yeah.
And how do you think that stacks up, given your competitors have launched or are looking to launch scooters around that range?
So I don't think price really matters in the market. It's really a value for money market. So we are confident that there is no other product that comes with the kind of offerings that we have in terms of the space or the utility value that the vehicle brings, or even the style it comes with. So price is really not going to be a problem.
Okay, so given that price is not a problem, you're still coming up in a market which has several well-established players with deep pockets. Some are startups, some are established companies. What is going to set River apart, and what will be your go-to market strategy?
So there are many established players, but the market is huge. Last year we sold kind of around 600,000 electric scooters out of the 18 million two-wheelers which are sold, right? So the market is there and the space is there for everyone. And we run a very efficient shop. Like, it is completely designed and conceived and developed in India, and the development time was less than 2 years. We have a team of around 300 with around 250 people in R&D itself. So we run a very tight ship, very, very efficient and agile shop. So that's going to be a major difference. Our distribution strategy is a city-wise plan where we want to go to 3 cities in 2023, 50 cities in 2024, and then scale up from there.
Okay. Yeah. What are these 3 cities you'll start with?
Bangalore for sure. We're still evaluating 2 more cities. We will announce that in the coming months.
All right. If you could also tell us, do you have a demand or an order pipeline already built up? And what is the kind of manufacturing capability that you have capacity as well?
So we are opening pre-orders for Indy today. So we can already see the order pipeline getting filled up right now.
Okay.
And
any numbers?
No numbers yet, sorry. So the manufacturing facility is up and running in the outskirts of Bangalore. Okay. It will have a capacity of 100,000 scooters per annum. So that roughly translates to around 9,000 vehicles per month.
I see. Also, if I were to quickly ask you, will you be requiring more funding? You've raised $13 million so far to build this electric scooter. Now you say you have a strong pipeline, although you haven't told us what the number is. How much would you require if you have to raise money, and how soon would that be?
So the $13 million that we raised were completely invested into R&D and the factory. Now we will raise startup capital. Well, this is a capital-intensive business, and we are continuously fundraising. So you will hear more news about it in the next few days. Okay. So we're targeting to raise around 50 million in Series B later this year or early next year.
Okay, $50 million in total in Series B. Okay, thank you very much, Mani, for speaking to us. Any final thoughts, to the consumers out there, for the newest EV scooter, what they have to look forward to?
I think the scooter will speak for itself. There is nothing like this there in the market today, whether it's an IC engine scooter or an electric scooter.
Sure.
So let the product speak for itself.
Oh, actually, there is the concern about charging infrastructure, which I forgot to address earlier. But, would River also be investing in that as well?
Yeah, we have plans to do that. The vehicle comes with a standard charger that you can use to charge in your house.
Okay.
But we have plans to invest in charging infrastructure sometime starting 2024.
All right, Arvind. Thank you very much.
Thank you. Thanks a lot.
Thank you. It's back to you guys in the studio.
Well, thanks, Ritu. And that was River's new electric scooter Indeep that's priced at 1.25 lakh rupees and delivery to start in August 2023, says the founder Arvind Mani. With that, it's a wrap on this edition of Startup Street. More news and updates coming up on the other side. Stay tuned.
Lets you